The question is whether you believe that investors are supposed to look through these numbers, look through these supply chain problems and say, OK, that's one thing. It's going to be a lot better 12 months from now. Or is there a bigger issue here?
I think it's the latter. And as they admitted, these problems are going to increase and be more impactful in the fourth quarter. But we have to extrapolate this to the broader macro impact. Apple is one of those tech companies that is not as immune to some of their brethren to these supply shortages, to in some cases increased labor pressure. And so as we go through this quarter and we start to hear more of that, and we start to see more of the impact quantified on the companies, I think that the risk appetite will decrease into the quarter, particularly when we start to add things like a tapering announcement next week, or even perhaps foreseeing interest rate hikes beginning of next year. Remember, the Fed said that benchmark is if it looks like we're going to have 4% inflation into the spring. And so I'm extrapolating what we saw from Apple and what we saw from Amazon to buttress my cautious view into this quarter.
Anne, are you in the same place? And let's mix Amazon into this situation.
Yeah, I think the most interesting thing about the Apple's earnings call was the lack of forward-looking guidance, and Amazon sort of did this too. Tim Cook did not provide any sort of end in sight for some of the supply chain challenges that have been bothering not only Apple but others in the sector. And Amazon equally pointed to seeing real challenges in Q4, but didn't point necessarily to improvements in 2022 or going forward. So I'm a little bit cautious on this. That being said, when I think about investing in Apple and Amazon, I'm looking much more on the services side than I am on some of these asset-intensive areas. And so I still think ultimately their business models are interesting longer term.
Greg, on Amazon, how concerned are you about margin compression long term, and maybe what that says potentially about margin compression across industry?
So I think Amazon's a little bit unique here. And, when we looked at, for example, Google, when we looked at Microsoft, we saw them delivering margin expansion. Microsoft was at 46%. Google's delivered 1,500 basis points of operating margin leverage since 2020. And so it depends on what businesses you're in. Obviously, Amazon feels it a little bit differently because they are more subject to those shipping and trucking costs and the increasing pressures there. More subject, obviously, to inventories concerns and labor prices rising as well. So Amazon's going to be a little bit of a different animal here, being subject to all those things. But again, it's a perfect example of me being bullish long term because we saw great growth in the cloud business, 40% there, and continued margin expansion there. But at the same time, being subject to all of these pressures that I think will have us de-risking a bit into the quarter.
So, but Greg, explain this. If you're bullish long term and the price comes down at all, you'd think that's a buying opportunity. But then you're saying you're trying to de-risk over the next, it sounds like a couple of weeks or months. So how to think about that?
So we need to get some of these negative catalysts behind us. That's how I think about it. We need for some of these things to be more widely accepted than they are. For example, I'm expecting to see at least 6% CPI this year and at least 5% PCE this year. I don't think that that's priced in yet. I'm expecting the Fed to talk about rate hikes in the spring of next year. I don't think that that's priced in yet. Even when we look at the quarterly results, so far we've had about a third of the companies report, and about 73% have beat on the top line. That's down from 83% last quarter, and I expect that number to go lower as well as we increasingly hear about the challenges of the inflationary environment and the price pressures. And once I feel like that's baked in and now the expectation and not the anomaly, that's when I'll be more comfortable adding to my positions here.
And final question, if you could own Apple or Amazon, which one do you own?
I'm buying Amazon. I think the huge amount of white space out there is extremely appealing. I think 200 million Prime subscribers with all that ad data to start tracking aggressively right when Apple is preventing others from being able to do so. I think that with Amazon Web Services also on fire, I'm long Amazon. I think if it continues heading downwards price-wise, I'm definitely going to be doubling down and buying this stock.
Okay. Anne, thank you. Greg, thank you. Have a great weekend, guys.